Okay, very good morning. I hope everyone is well. It is Friday 24th of May. Things we're going to cover, as you can see on the graphic here, we're going to look at the performance of what we had this week with the S&P now on track for its third down week, at least for the moment. Kind of assessment of this whole week as a whole. And then we're going to have a look at a few other subjects, of course. Trump updates on commentary in regards to the trade war. We've got things to look out for in regards to the potential timetable of the departure of UK Prime Minister Theresa May. And then a few other things like ECB policymaker comments that came out overnight, which are also quite interesting. And then we'll have a look at the calendar and then the technical levels as well. So, yeah, first things first, just having a look on this graphic that I'm showing you at the moment. This is looking at the S&P 500 index weekly percentage change. This goes back over the course of 2017, 18, 19. And as you can see, 3 consecutive down weeks is what we're on course for at the moment. And just looking when the last time that did occur, obviously that big sell-off we had in December, Q4 of last year, that there is the last time this happened. So yeah, 5 months, almost 6 months ago now since we last had this type of activity. But personally, I don't find that too surprising, and it doesn't trouble me a great deal in a sense that I think that this is going to capitulate and this is the end and stocks are going to continue to decline. I don't think that is the point here. One of the things is, remember, up until this kind of 3-week downturn that we've had, it's almost like a byproduct of the realization that the trade talks with China and the US are not going to be quite as easy as one might imagine. I still do believe, though, in time a deal of sorts does get agreed. It's just that the market got quite overextended on the fact that a deal was going to be done. But we know how the powers that be, the kind of puppet masters at play, and particularly Trump tactically, how he plays these types of things. I don't think it's massively unsurprising, but I think this is a little bit of a byproduct, if you like, of markets mispositioning, getting overly positive, and so it's a healthy pullback to around these levels. The other thing, of course, though, that happens in this type of situation when we're talking about the trade war and the impact that could have on the world's largest economies and global growth prospects is that this isn't just an equity story, this is also a demand story in the commodity space. Oil is set for its biggest weekly drop, going all the way back to the same basically period, right when we were around Christmas, when we hit right at the bottom of that kind of oil and equity sell-off. So a few things here I just wanted to have a look at on the chart. Firstly, I know Sam will look at these much more intraday to look at the trading strategies for the day ahead, but let me look at the much more top level, longer time frames. Now this is what I'm going to do actually, I've got crude at the bottom. I'll put the S&P 500 on the top on my charts here, and see if I can squeeze this up a little bit here, move that there. So this is looking then, if I just move that over, just so we've got the same, pretty much the same time frame. So you can see how fairly correlated these moves have been, given the macro kind of driving story. But where we are technically now, I think, is a pretty decent level, and as that transpires into the intraday environment, and as I'm going to discuss what I think are quite positive comments from Trump, I do think there is scope for a potential rebound today. Looking at where we are at the moment, you can see that candlestick or the wick. I know it's fairly small, but we got pretty close to testing around those lows that were seen in mid-May. The resistance points that were seen in late Feb, support that was in kind of late March, and then obviously that kind of triple top that we had at the Q4 period of last year, and then also areas of significance going all the way back into 2018. So I do think there's a pretty good level here at that 2800, also obviously psychological as well, and we've already bounced off that a decent 25 points already. Also, what I'm looking at here in crude is crude had a very violent sell-off yesterday, but that tends to be what happens with WTI crude. It's one of those assets Gold is quite similar, where it tends to capitulate, particularly when you have an economic or fundamental driver for direction, but then overlaid with big, longer time frame technicals being broken. The market tends to drop pretty quick, and that definitely was the case yesterday when we powered through $60, which you can see here, similar type of setup. I'll just make that a little bit bigger for a second. So we broke through like those kind of highs that we were seeing in late March, that low around early May in the 60 handle, and then we kind of snapped lower. We were looking at the time that 58.20, that's the key area technically, because again, similar case to this equity move. I think we've come to a point now of a strong area of support. I think given the size of the sell-off that's materialized already with the news at play, I think that this is a pretty good floor now for going forward for the rest of today's session at least. Talking to Tim, who in the Trading Live Room chat yesterday, and he was kind of saying that, I was asking him because he looks at the market using VWAP market profiling, and he was telling me that, well, mathematically the kind of fair value, if you like, of crude oil is 58.20, which obviously lines up perfectly with that technical level that we were looking at yesterday, and where the market's kind of found its footing with this latest sell-off. So the kind of maths and the levels all working out in that respect. But be interested to see how things play out. And let me show you this Trump comment, which obviously fundamentally might help ease these nerves that have been kicking in. This comes from Trump saying that basically Huawei could become part of trade deal with China. Now, he classified that company as very dangerous. You know what Trump's like. He said it's not very dangerous, it's very, very, very dangerous. So he's serious when he says things 3 times. But the important thing here was that he said that despite that fact, and despite that being the main company that's right in the epicenter of this latest technology-focused part of the trade negotiation, he did say it could be part of the trade deal. So it's not being excluded, if you like, and it's almost like a subtle, small olive branch that things still could be rectified. Remember, Treasury Secretary Mnuchin said, we still got basically 30 days before these things kick in. So it's not to say that this deal, not the deal in itself, but this latest stumbling block can't be surmounted to some degree. So that, with the severity of this news, the severity and the size of the sell-off getting slightly overextended now, I feel, with the key technical levels of support that are in play, I think we could be in for a moderate recovery today. Big story though, of course, that people has been really dominating the domestic news flow for sure. That has been Theresa May, set to announce her timetable to quit as Tory leader. So this has come about because she is meeting with Graham Brady, who's the head of the committee of those kind of backbenchers within the Conservative Party. Apparently that's happening, I believe, this morning. And it's going to be looking to construct then the details around the timetable of her stepping down as Prime Minister. So a couple of things here that this Bloomberg and sources have been saying. This is that May intends to quit as Tory leader on June 10th, according to Bloomberg. So an election to choose her replacement can begin after President Trump's state visit to Britain, according to one person familiar with the matter. That therefore means that she would want to remain as caretaker Prime Minister while her successor is chosen in that kind of political system that we discussed yesterday, where we have those elimination rounds, and then potentially at this point does Boris Johnson become the Prime Minister. So yeah, lots of rumours in circulation yesterday. I'd probably expect the same to circulate today in regards to her imminent resignation. Now, I must stress I do not see that happening today. Partly as well, the other reasoning being is that we had the UK part of the European parliamentary election yesterday alongside the Netherlands. We get a couple of other countries, I think it's the Czech Republic potentially today, but then the big boys, Germany, France, Spain, everyone else comes predominantly on Saturday. As a net result, results aren't due until Sunday. I don't really see any sense in her immediately stepping down as of today. Not until those results probably come out. I'd anticipate potentially over the bank holiday something might materialise of more concrete nature. So we'll see. How much is this going to move the market? Well, I think an immediate resignation is probably the most market moving, because I think most people, most consensus thinking is probably fairly aligned with my own, in that that's probably the lesser likely and therefore would be the most impactful, because then the markets would have to immediately price in the prospects of, if she wasn't going to be a caretaker Prime Minister, well then it kind of is thrown into very short-term disarray, because it's going to take at least 6 weeks, if not longer, 2 to 3 months, in order for the next Tory leader to be appointed. The pressure there being to get it in before summer recess, of course. So, yeah, that would be the most market moving. Her outlining her timetable of departure, if that did happen, is that just a hit sell button at market? I also don't think so. I think this has kind of been bedded in, and this explains why we've had this kind of repricing of sterling over the course of the last week or so, as this has really kind of hit its boiling point most recently. So that's how I'd kind of approach things. I definitely think you need to keep an eye on Twitter, keep an ear out on the squawk. Obviously, stranger things have happened. Other final story I wanted to look at, and then I can hand you over to Sam. This is in regards to the ECB. I just thought it was quite interesting because this comment from Vassal, or Vass, I'm not sure how you actually pronounce that name, because I don't think I've ever heard them speak before. This is the Slovenian central banker, I believe came into power in January, but commented that with the ECB, I mean, to give you some context, the ECB are gearing up for their meeting in Lithuania in 2 weeks' time. This next kind of interest rate meeting is going to include, of course, their latest forecasts, but importantly, people are looking out for the discussions around how they're going to conduct this new round of targeted long-term refinancing operations, the TLTROs. The comment, though, that was made by this ECB member is that they were quite confident the economy is on the right track, and that's what's happening in line with what they're expecting. So potentially, a little bit more kind of playing a straight hand, rather than people getting running away with thoughts that the ECB are going to turn kind of radically dovish, just given the obvious risks associated with the trade war. We know the US haven't really fully turned their gaze onto Europe as yet, but we've obviously seen it impact the likes of Germany, being an export-led nation already, who are also suffering, layering in the risks around Brexit. But interestingly, we look at the chart down here. This is the economic rebound, and basically, to make a bit more sense of this, this was the ECB March central projections. So these are the ones that will be due for updating in 2 weeks' time, and that's in black. But you can see the actual quarterly GDP growth in Q1 of 2019. So this bar here actually came in much stronger than expected. So despite all the kind of negative things that might be occurring, whether politically or economically in some nations, the overall Euro area is performing. So I just thought I wanted to share that with you. Otherwise, just having a quick look across the broader charts, again from a sentiment point of view, I'll let Sam talk over the technicals in more detail. So equities, index futures are positive. As I'm speaking, the DAX is rallying. So again, fitting into that kind of story that I've been trying to describe this morning, as how things kind of stand at the moment. That also, there's quite a dramatic turnaround in the dollar yesterday, and it's continued to pull off, and so hence has supported both the major currency pairs. Now, I would say the uplift you've had in euro, dollar and cable is more potentially a dollar story than it is unique to that of anything positive happening in the pound, for example. Potentially a little bit of a read across in these ECB comments I mentioned, but quite frankly, the Slovenian member seldom is really listened to because not one of the big major hitters. So I think it's more of a dollar narrative. If you're trading those pairs, that's what I would be watching. Any continued retracement in the dollar, then they'll be looking to play that accordingly. And then oil also having a bit of a rebound given the dramatic sell-off yesterday. This is quite natural price movement. I guess the nearest short-term target there would be upside resistance seen at the pivot, which pretty much coincides in the futures with the 59 handle in today's session. Calendar-wise, what's on the agenda? Let me just show you. You've got UK retail sales was scheduled for yesterday. I'm not sure the reasoning of why it got delayed, whether there was any read across given the fact that there was the voting happening, not sure. But besides the point, we'll be looking out for that at 9:30, of course. Impact value from retail sales. I mean, it's a tier 1 piece of economic data theoretically, but obviously just given the context of the current state of play, I don't think it's going to be particularly market moving, not unless it's something radically out of line, and even then it could well just be a short-term move. Speculative prop traders might just want to get in and out rather than hold any type of position, especially with May meeting Brady later on this morning. On that point, just keep an eye on my Twitter handle. You can see it shared on underneath my visual at the moment. I'll tweet any updates and I'll update trading live as and when I have a definitive time when that meeting's happening. Otherwise, in the US session, durable goods in the afternoon at your 1:30s, Baker Hughes. Otherwise, pretty quiet. And not forgetting as well, it is a long weekend in both the UK and the US. So Memorial Day, and then we've got the holiday as well here in the UK. So just to re-emphasise, the Amplified Desk will not be open on Monday. Markets, if you are looking at them, will be barring anything shocking happening in the news front, particularly I guess mainly around the trade side, which I don't anticipate, then it's probably going to be incredibly quiet until we commence services on Tuesday. Alright, let me hand you over to Mr. North, and he can look at the charts from a technical perspective, but otherwise with that I'll wish you a great weekend. Thanks very much.
Good morning, everyone. Hope you all had a good week so far. Like Ant said, the DAX pushing on here to a new high of the day, and I think it's going to be an interesting morning into the afternoon. Yesterday was, I think, really great conditions for trading. I think what day was it? Thursday. So Wednesday was pretty tricky. Yesterday we got quite clear directions, good correlations. Always a bit tricky perhaps the next morning as well. When you start seeing these reversals, you think maybe the next big leg down is going to come. I wouldn't be, obviously, well, the market's telling you right now this is not the case. However, where are the key levels, the line in the sands? Where would you need to be aware of for equities if they're going to keep reversing, or are they then going to head back lower? I think just for the DAX, obviously we've just gone through 8 o'clock, so things are getting a bit more tasty. You can see above where we're trading now, we had the low of Wednesday, decent breakdown yesterday around the similar sort of time in the pullback there. So I'll be keeping an eye on that price point. If it was to get through there, you've still got obviously quite a few key resistance levels, most notably the initial Asian session low, really good retest of that around 745 as well. So quite a few key levels. By no means is it are these equity markets out of the woods, but a decent recovery yesterday, and I would be very surprised if we were to have a very strong push lower going into the back end of the week. Almost a double bottom in equities. I know earlier in the week, if I just move my chart out of the way, the break of the trend, if we have this on, you can see early in the morning yesterday, it was obviously quite key, and that every sort of support that it was met with was only brief before going back lower. So those key levels, similar to the DAX, that I'd be aware of. Just you had the breakdown of S1 was also good resistance, so keeping an eye on that 28.36 on the futures before potentially looking a bit higher up at 43. These would be key levels that I would be looking at as well. Probably worth just noting though, we have in similar sort of fashion broken above this trend from yesterday, which was controlling price action. So things are turning round, as is the case with days where it goes high or low quite extensively. I would always look to potentially have on any sort of trend lines from, in this case, the lows, and if they were to break, then you could get a continuation, rather than maybe looking to sell higher up when you have such a big day to the downside. Potentially the break lows are where I would focus on. So same for the Nasdaq, just looking at those lows. Can we get a trend line? Okay, you've got a few tests here. If that was to break and things were in correlation with that could be the opportunity to, in this case, get short again. For gold, it would be the opposite way around. Do we start getting a trend line from the highs? Doesn't look too good. I guess you've got a bit of a false break, so I wouldn't have anything on there at the moment. I guess you've got the top end of yesterday's range at 12.85 that I would be keeping an eye on as well. Also, for those that use fibs, probably worth on these moves as well, just from the lows of yesterday in the case of gold, where matches up with another decent level of support or resistance, and go about it that way. Of course, gold on that longer term chart, we can see yesterday really strong push to the upside, and where the trend line from that low of last year was holding so well on what day was it, on Wednesday, before breaking through on obviously yesterday. We're keeping an eye on that still as well going into the back end of the week. Looks to come in around 12.79 today. Also longer term levels, we'll go through this throughout the day as well, but of course pound cable on, I'll just move my chart just to start that trend line. The 2017 low 126 support that we had back in December last year, keeping an eye on that as well as we go into the back end of the week. Another market that obviously had a decent day to the upside yesterday, eventually was euro. Key level around those lows. I saw a lot of tweets talking about how people were taking longer term profits at that area, and you can see why. Really key support going back to the back end of 2016, early 2017, and really strong reaction. Of course, that doesn't mean it's out the woods at all here, and again, just being a bit careful with some of these markets where you perhaps don't understand the moves. Well, just leave them alone. I think could be the better way to look at it. If you are in favour of going short euro against the dollar, have your lines in the sand. Where's a key level support? Well, use that maybe as the break to then give you the cue that actually sentiment is then to the downside. Could be yesterday's high. If we break underneath that, come back to retest it as resistance, for example. But things just reversing across the board, so just be slightly careful of that. And mentioned, of course, that key level, key area in oil, decent reaction around that point, albeit a little false break yesterday, but we're back above there now, so quite key to keep an eye on how we go into the back end of the session there as well. Any questions, as usual, obviously please do let us know. Obviously some interesting opportunities potentially as we go into the back end of the day. Just a quick look over that calendar again, just to plan the morning. 9:30 retail sales. So for the pound, we've had a bit of a push this morning. We are starting to see a bit of a reversal there. Probably still a bit of time, I guess, for a trade, but looking to come out of that around 9 o'clock. With the equities, the durable goods are unlikely to really move things, so those trend lines will be key. Perhaps looking for the cue from the DAX to see whether we can also break those as well and then get continuation to the downside. But at the moment, as long as it's above, I'll be favouring or not favouring going short aggressively. Any questions, please do let us know. But I hope you'll have a good bank holiday weekend, and I'll catch you in the chat today.